Again, apologize on behalf of the Central Bank of Nigeria to all of you for inviting you here at such short notice for this press briefing. But again, thank you for coming. The Central Bank of Nigeria has invited you here today for two main reasons. First, we are here to provide you with our understanding of the preliminary effects of the outbreak of the coronavirus, which began in Wuhan, China, in December 2019. And second, and more importantly, we are here to announce our first set of response which reflect our understanding of the effects of the virus on our people. You probably already know that thousands of people, hundreds of thousands of people are affected by this pandemic, and indeed thousands of people have died, and in different parts of the world, leaders in those countries, Fed chairs or the governors of central banks in those countries have all started to respond as to what actions would they be taking to mitigate the pains that will be visited on their people as a result of the outbreak of this coronavirus pandemic. You know, from the monetary side, for instance, in the United States, there has been reactions from the J Power twice in 2 weeks about interest rates. Even the President Trump himself had talked about how even loans to students in universities and schools will now be offered, at least during this interim period, at zero cost and all that. Several things are being done by different economies, particularly on the monetary side, to see how to ameliorate the pain on the people of those countries. But let me say that our initial assessment shows that the consequences, yes, we do expect, naturally we're beginning to see as a result of the death, what we call health crises on people in different economies and different countries. But I'd like to say that downside, after facing the realities of the health crisis, what we do expect is that there will be very serious economic crisis. Indeed, some are already saying that whether we like it or not, the global economy will certainly go into recession. You all probably know that in 2 weeks, the New York Stock Exchange has lost over $13 trillion as a result of this. And no one knows how far these losses will go. But for us, as Nigerians, now realize the coronavirus pandemic is having significant adverse consequences for both the global and the Nigerian economies. It has already led to unprecedented disruptions in global supply chains, sharp reduction in crude oil prices, turmoil in the global stock and financial markets, widespread cancellations in sporting, entertainment and business events, lockdown of large sorts of movements of persons in many countries, and intercontinental travel restrictions across critical air routes all through the world. These outcomes have had serious adverse implications for key sectors, including, but not limited to, oil and gas, airlines, manufacturing, trade, and consumer markets. In furtherance of its financial system stability mandate, the Central Bank of Nigeria is committed to providing support for affected households, businesses, regulated financial institutions, and other stakeholders in order to cushion the adverse economic consequences of this pandemic on our people. Accordingly, the Central Bank of Nigeria hereby announces the following policy measures. But before I go into the details of that, as you may know, the Central Bank of Nigeria, operating through our deposit money banks, has close to about 3 trillion naira in various forms of intervention facilities, either through Anchor Borrowers Program, through our Commercial Agricultural Credit Scheme Program, through our Micro, Small and Medium Enterprises Program, or through our MSMEs Program. Since we do expect, and it's dawning on everybody, that as a result of this pandemic, that revenues that will accrue to businesses, particularly to even run their business, not to talk of even revenues that will accrue to them from where they pay their bank loans, have become so short. Naturally, we expect that there will be difficulty by businesses to service their loans. So we make the following propositions amongst many others that we'll be making from time to time as we proceed in this journey. 1. Extension of moratorium. All the Central Bank of Nigeria intervention facilities are hereby granted a further moratorium of 1 year on all principal repayments effective March 1, 2020. This means that any intervention loan currently under moratorium are hereby granted additional period of moratorium of 1 year. Accordingly, participating financial institutions are hereby directed to provide new amortization schedules for all facilities for their beneficiaries. 2. Interest rate reduction. Interest rates on all applicable Central Bank of Nigeria intervention facilities are hereby reduced from 9% to 5% per annum for 1 year, effective March 1, 2020. 3. Creation of a targeted credit facility. The CBN hereby establishes a facility through National Microfinance Bank to the sum of about 50 billion naira for households and micro would not decree on interest rates. But what happens is that as a result of activities in the market, the size of liquidity in the market, right, interest rates will either go up or come down, also depending on monetary policy decisions of the Monetary Policy Committee. But what we're saying, which was also here, maybe I should just expound more on that, is that, and you all know it, that as a result of the loan deposit ratio policy, we have seen that banks over a 7-month period from May 2019 to December 2019 had granted almost 2 trillion naira in additional credits, running across all the sectors of the economy, including even household, individuals, and the rest of them. In the course of this, interest rates have also come down, and we all know that. We know of some corporates today that have gone out to raise corporate bonds, and they have raised those bonds at single-digit rates today, which is far lower than the rate at which they would have raised money in the market even a year ago. Okay, so what am I saying? That interest rate is already low anyway, but that by our activities and also the fact that we will continue to emphasize and place direct focus on the issue of the loan to deposit ratio, which sort of pushes the banks to lend. And that process of market competition for loans will naturally result in lower interest rate like we've seen today. So we're not afraid of that. We know what to do, and that will naturally happen. But the area where we felt that we needed to speak on very directly is that because of the drop in revenues to companies that may be or that will be directly impacted, adversely impacted upon by this COVID health crisis and economic crisis, because the revenues will drop, that we are saying if your loan was initially meant to be a, say, 3-year loan, where, for instance, you were paying on a monthly basis, say you took 10 million naira and you are paying, say, 100,000 naira as repayment, or a 3-year loan, we are saying we are going to grant the banks the dispensation where they can restructure your loan from 3 years to 6 years, such that in addition to low interest rates, what you'll be making in instrumental repayment of your loans would have dropped from, say, 100,000 naira monthly to, say, 50,000 naira monthly, to match the reduction in revenues arising from the impact of coronavirus. That's what I'm trying to say. So it will naturally get to everybody. That's what we're saying. Second, interest rate reduction by Alonso, considering altering NPR. There are so many things the Monetary Policy Committee takes into consideration in its determination as to whether or not to alter NPR. So I think we should just wait. Indeed, Monetary Policy Committee will be holding next week, and I'm also sure that with the array of data that will be confronting the Monetary Policy Committee by next week, they will direct as to whether or not to alter, or whether or not to reduce, or whether or not to raise interest rates. I think that just next week is just 7 days away, and I'm sure I'm going to be talking to you again, so you will see the outcome of that meeting. How much? I said earlier that if you calculate how much in intervention, because again we are talking about the pain of repaying your loan and the interest rate that you pay on your loan, in this case particularly intervention fund that we have granted through our banks. Okay, and I said through our commercial agricultural credit loan scheme, through our MSMEs loan that goes substantially through the National Microfinance Bank, NISA, or through our micro, small and medium enterprises that also passes through all our various channels of participating financial institutions, or even our Anchor Borrowers program, which I put at almost close to about 3 trillion today, that the interest rate that you will pay on those loans are no longer going to be at 9%, that they will now be halved, almost halved to 5%. So what are we saying again? You will get that loan for longer tenures. If those loans were in their moratorium period, where maybe you just took the loans and you are still planning to import the plants and the machineries and the rest of them, and you initially had a moratorium or a grace period of 1 year, that we are automatically granting you a grace period of 2 years, so you don't have to bother about repaying that loan during the moratorium period of 1 year. That you are now being given extra 1 year. It's after the second year has elapsed that you will now begin to talk about how do I repay. But also complemented by the fact that the loan is restructured, and also it's at a lower rate. Naturally, what we are trying to say is that the burden of taking a loan and the strain of getting revenue to repay the loan has been ameliorated for you to the extent that you pay much less for your loan repayment for a longer period. Thank you.